Welcome everybody to YieldApp's Yield Pro AMA and little update. We're going to try and keep things snappy here. We've got Lucas, Curtis, and Andrew with me today, and there's been quite a lot of updates happening with Yield Pro. We've got some updates to the app around the corner. We've just added Solana.matic to our dual currency product. So what we want to do today is I'll just give a brief intro to who we've got on the call here, a little bit about the background, what we're trying to do with Yield Pro. Obviously, there will be people who see this, maybe not necessarily live here right now, but later on who don't know what Yield Pro is. And Lucas will have some insights on the market and what he's been up to with the portfolio at YieldApp. And then we'll go through the Yield Pro products and how to use them. So just a brief background, Curtis was an executive director of JP Morgan, 15 years experience managing investment portfolios and creating bespoke investment solutions. We've got Andrew, who is an options trader at HSBC, New York and Hong Kong, managing FX options risk in G10 emerging markets. Andrew's got a great history as a crypto portfolio manager as well, which is ongoing right now, obviously. In 2021, he was at one point the most profitable trader on BitMEX. Lucas, I think, needs no introduction at this point, but he's our Chief Investment Officer at YieldApp. His achievements are a bit long to list, but Managing Director, Senior Trader, Designated Material Risk Taker at companies like Credit Suisse, UBS, Barclays, just to name a few. When you combine these guys, as well as our head of DeFi, who's not on this call, whose background comes from predictive risk modeling, you start to see the picture emerge that we value here risk management and capital preservation. It's not just highly valued; it's our speciality. We've always at YieldApp managed the risk for you, so you don't have to. And I think over the last 3 years, we've really sheltered our users from all the chaos and take great pride in the fact that users can sleep well at night and just earn passively on their crypto. But with that being said, we can see that there's a middle ground between completely passive earn products you get on YieldApp right now and the fully interactive, high-risk 50x Doge shorts you could do out on many platforms there. We've had a lot of users saying that they want to find that middle ground. They want to be a little bit more interactive. They want to invest in strategies that maybe have a higher upside potential while still minimizing risk. And as with all things at YieldApp, we have a white glove approach. So anybody who sees this, anybody who's using Yield Pro or looks at it in the future, you can join our Telegram groups. And we even have individual groups with some of our traders who are able to speak with us on a daily basis about what's happening and run some of their ideas past us. We've originally, Yield Pro was on a separate app known as TroFi. We still have a simulator app where you can demo these strategies with no risk with fake money. And now we've seen that some of our products, the dual currency products, are fully integrated into the YieldApp desktop now. And with that, we've seen a really great uptake and more demand. So as I said, we've added some new currencies just yesterday, Sol, and Matic. And in the coming year, we plan to introduce more products, and I think Curtis might touch on what some of those might look like in the future. For now, I'll pass it over to you, Lucas, if you could give us perhaps just a little your take on what's happening in the markets in general and where we're at, and then we'll go to Curtis and Andrew.
Sure, thanks, Peter. Hi all, good to see you all again. Market's been quite interesting, obviously. Those who've been following my sort of weekly commentary or notes on Forecast News or some of my comments in Cointelegraph would have seen that, I was pretty excited that we would enter a new sort of bull run in the market. I know when we were in the early 30s or mid 30s, a lot of people were sort of ridiculing my stance. But here we are, 43,000, 44,000 yesterday, and market has had a bit of a run up. It's quite interesting if I look at the dynamic of this market and think to myself, well, the long-term holders or the big sort of large sort of wallets haven't really seen much turnover. We've got less and less supply in physical Bitcoin and other coins in the market. So a lot of this is coming from, futures and perpetual swaps trading, and demand. But most importantly, because the smart money supposedly had a lot of shorts on in the market, that lack of liquidity and the ability to actually force their hands saw that huge move higher over the last few days. And we've seen, we've gone through 40,000, which was, I thought we'd actually go through their the weekend before last. So I was a little bit premature, but obviously now we're 10% higher than that, and markets are sort of going to wash around here for a bit. I think we'll probably see a bit of a pullback to probably sort of 40, 41. And then I think leading into the new year, obviously with the potential for a positive announcement with the SEC and ETFs, we could see 60, 70,000 level in the first quarter of next year, and obviously with the halving as well. It's not unrealistic that we could see Bitcoin hit 100,000, six-figure number, and I think that's something to look forward to next year. I know when I talk to people about this, they say, "Oh, it's impossible, etc." But realistically, we're seeing less and less supply, and if we start to see this institutional adoption through ETFs, then I guess the demand will outstrip supply even further, and we will then end up with a much higher a level in these coins. So yeah, that's a market update. Pete, back to you.
Yeah, thanks, Lucas. So, Curtis, if you would, I wasn't sure if you or Andrew wanted to jump in first to just give us a little update on what's happening with Yield Pro, what we're working on, and then going into just showing everybody what's available right now and how to use it.
Yeah, sure. I can do that. Hi, everyone. Very excited to be here again on AMA, with Dual Currency finally integrated on web app. So very soon we'll be launching it on the mobile app as well. And we'll be adding more products to the offering as well, like principal protected product or shark fin, things like that. So I'm going to walk through a demo on Dual Currency. But before I do that, let me just give a very brief introduction about what Dual Currency is. So basically, Dual Currency is one of the most popular investment product in traditional finance. The main goal is really to earn high yield. So you should be comparing this versus like fixed earn or deposit rate, things like that, instead of comparing the return versus the underlying currency. The product can be denominated in stable coins or cryptocurrencies. So let me show you a very quick demo on our app. I believe you guys can see my screen now. And so basically, this is the web app dashboard. And you can see that in here, there's a new icon called Yield Pro. So there's buy low Dual Currency and sell high Dual Currency. So buy low is basically suitable for you when you're holding stablecoin. So your view is basically that you do not mind potentially buying the cryptocurrency, let's say BTC, at the lower than current market price. And at the same time, you can earn very high yield. On the other hand, if you are holding cryptocurrency, you should be doing the sell high Dual Currency. Your view is basically that you do not mind potentially selling your crypto holding at a higher than current market level. So let me show you how you can subscribe to a Dual Currency on the platform. Now, if you click Get Started, you may see a screen asking you to fill in a risk questionnaire. So that's basically to categorize whether you're suitable to do Dual Currency. But since I've already done that, so it's not showing on my screen. Now, you can see that investment asset, which is basically the asset that you are holding. So it can be USDC or USDT. And linked asset would be the asset that you do not mind potentially buying. So for example, I'm pretty bullish in Bitcoin. So I really do not mind to buy Bitcoin at a lower than current market price. So the current market price is 43,000, around that. And I can do an 8 days tenor. And let's say my target buy level is around 42,000 or 41,000. And this is the APY that I will actually be getting, so 28% annualized. So once you have determined the maturity date, the tenor, and the buy level that you wanted to do, you can take a look at the chart here, which basically shows you the two potential scenarios. At maturity, if the price is above 41,500, which is the buy level, then you receive back your original investment plus the APR. Otherwise, if it's below the buy level, then your stablecoin get converted into BTC plus APR. So in both cases, you get the APR at 28.1%. Now, when I click continue, you'll be able to see the confirmation of the terms here. And again, you'll be able to see at maturity the two potential scenarios. So if you input the amount here, you'll be able to see the final amount plus interest that you'll be getting, or the potential converted amounts in BTC that you'll be getting, both with APR included. Now keep in mind that this product is designed to be held until maturity, so you can't really cancel the subscription once you have subscribed to it. And also, this is not a principal protected product, so you should really consider whether it's suitable for you. Now, if you click next, check the terms and condition here, and click continue. Then that's it. Basically, you're subscribed to $100 UST in dual currency buy low. So you'll be able to see your subscription here, all the active subscription, as well as the matured transactions as well. Now, since I've just subscribed to an 8 days maturity dual currency, 8 days later on the 15th of December, depending on the Bitcoin price at that time, you'll be either getting back your principal in USDT or BTC. So it will be based on the settlement price on the date of maturity. Now, to give you a better perspective on how you may be using dual currency to generate a good return, let me show you one of the cases that a couple users have done earlier this month. So last month, earlier this last month, so some of the users were trying to buy Bitcoin, like they were thinking that at this level, Bitcoin was about to break higher, right? But they were pretty risk averse. So instead of doing, just buying the underlying directly, they enter into a buy low dual currency. So at that time, the Bitcoin price is at 38,000, and he chose a buy level at 36,000, which is below the current market level at that time. So his view is basically that he thinks Bitcoin is going higher, but his risk at first, so he doesn't want to chase higher at 38,000, and he doesn't mind to buy Bitcoin at 36,000 because it's pretty comfortable that to buy at that level, and he also wanted to earn some high yield. So obviously, after he bought entered into the dual currency, then Bitcoin retraced, and then on the maturity day, it just happens that Bitcoin was lower than 36,000, which is his buy level. So he got converted into Bitcoin at 36,000. And obviously, since then, Bitcoin rebounded very hard and rallied all the way up to the current level at 24,000 roughly. Obviously, this is a very optimal scenario, like when he bought Bitcoin at 36,000, it rebounded immediately up higher. And obviously, on the other hand, Bitcoin could go lower, then you'll be suffering a loss. So I think the key is that you should be doing dual currency with a buy level that you're comfortable with. So if you're comfortable with buying Bitcoin at 36,000, then you can select the buy level at 36,000. And then when Bitcoin rallied back all the way up to 42,000, he also do a sell high dual currency 2 days earlier. So basically, which means that he doesn't mind to sell his Bitcoin at 44,000 potentially. Either way, he will be earning high yield. So quite a lot of clients have been doing this, buy low, get converted, and then do a sell high, and switch around, buy low and sell high. So if you're doing this strategy consistently, so it should give you some pretty good return in the long run. I'll pass it back to you, Pete.
Yeah, no worries. And, just the obvious disclaimer, nothing in this call is financial advice. A conversation I've had with quite a lot of people who have been starting to use the buy low. One strategy you've demonstrated there is when you're converted, doing the opposite trade down the road. Another strategy that I personally use is I actually use the dual currency buy low just as a DCA tool for myself. So I take a small amount of my USDC and put that into a buy low, and basically whatever the price of Bitcoin is today, the worst case scenario is that you're converted at a lower price than what it is today. So if I was going to buy Bitcoin today at 44,000, my worst case scenario is I'm converted to Bitcoin at say 42,000, right? So that's a win, and I'm long term, I'm happy to hold Bitcoin. So for me, that's a way to DCA, and if the price goes up, well, you earn some interest on the stable coins, which is what I was hoping to do in any case. So that's another strategy that works for me. But again, not financial advice. Did anyone else have any comments on just how to use the buy low and sell high together? And I guess one question, Lucas, if you don't mind, was when the price of Bitcoin is moving up, how does that compare to to doing a buy low, and where would you
Okay, so can I just caveat a couple of things that Curtis showed? The scenario that Curtis put up on the screen obviously is I want to buy BTC, I get filled lower, Bitcoin rallies higher, happy days, I sell my Bitcoin and make some money. But you also have the situation where you get converted. Let's say that BTC you want to buy at 36,000, you get filled at 36,000, and BTC falls to 20,000 or 30,000. You still own the BTC there, right? So what if BTC doesn't get filled at your 36,000 level? You get the yield on your stables, but you actually miss your entry and you need to go and buy your BTC at 44,000, right? So the way you structure your decision making has to be around the consequences of, am I happy to own BTC at any time? Well, okay, fair enough. If you really want to get in and you want to own BTC, you can't rely on a market pullback to get filled. You've really got to think about what it is that you want from your investments or what you're trying to achieve. If your end goal is to be, own as much BTC as possible for as cheap as possible, you need to take into account that with any product that has a maturity on it, the timing, you need to be directionally right and get the timing right, which is obviously not as easy as just being directionally right or getting the timing right. It's a little bit harder to do both. So just bear that in mind. Secondly, for a bull scenario, I do think we see a bit of a pullback now, and then we see a bit of a rally higher. I think the market is going to sort of wash around here for a bit as people try to put on more shorts in the institutional side. We've seen massive volumes go through the CME. Chicago Mercantile Exchange is now the largest crypto futures exchange. It surpasses more flow than Binance, etc. So, it's very much a mainstream product, and that only is good for the industry and good for the mainstream coins as well. For me, I always think that every different product has its place in a portfolio, right? You've got some stuff that's doing earn, you've got some stuff that's more speculative. Let's say you want to own, and you think the market's going to go through the roof. You want to own some more high yields with a higher risk strategy. Lots of different things. I mean, but ultimately, if you think the market is going to go a lot higher and it's not going to pull back, then dual currency isn't the way to get set. If you think the market is going to pull back and you want to buy it as low as possible and then get set, then obviously potentially dual currency will allow you to do that too. The one thing not to do is obviously do a sell high if you think the market isn't going to pull back at all. So yeah, just make sure you understand the different dynamics of what you're trying to do and make it fit with your own market outlook. If your market outlook is, I think we're going to go to the moon, just load up and just buy as much as you can, right? If you think it's going to fall, obviously you can go short, or you can do overwriting, things like that. There's lots of different ways to skin the cat. depending on your view on the market.
And I think that also, everybody's portfolio is different, and we've all got different buckets for different things. So what you touched on there was, and I think I just want to address Eddie's question in the chat, which is the downside to the using buy low as a dual as a DCA strategy. I think it's just been put up on the screen there. Is yes, if I put some USDC into a buy low and then at Bitcoin and it's 44,000. And then at maturity, Bitcoin's 100,000. I missed the upside on that, right? So for me, with that strategy, that's something where I'm putting the stable coins that I'm happy to earn interest on anyway, and I'm also happy to be converted into Bitcoin. I still have my Bitcoin, in Yield App earning interest. I've still got my ETH earning interest. I've still got my stable coins earning interest. But that's just a small portion of my portfolio that I might otherwise want to be trading with. But for everyone, they have their own different buckets. Is that fair to say, Lucas? No,
absolutely. I think everyone has their own risk appetite, what they're willing to what they want to be involved. I mean, don't forget, being in crypto itself is arguably one of the riskiest asset classes you can be in as far as regulators are concerned. So you're obviously not risk averse if you're putting money in crypto according to regulators. I think using structured products is a way of reducing that risk. You can also use them to increase that risk, but I think with the case of a dual currency, I think the idea behind it is a risk reduction exercise as an entry into the market, as opposed to chasing higher.
Yep, and all of this is, as I say, it's really something you look at with the part of your portfolio that you're looking to trade with, not necessarily your big hodls. Curtis, we talked about the principal protected product that you've designed for future. Is that something that I don't think you have it on you right now to display, but can you explain maybe a little bit the difference between principal protected buy low versus the not principal protected, as per the question on the screen right now? Thanks, Jake.
Yeah, so obviously dual currency is not principal protected right now. Like Lucas has mentioned, the case,
if you can just explain what that means, just define that a little bit more, please.
Yeah, principal protected basically means that you put in $100, you get back at least $100. So that's principal protected. You invest $100, you get back at least $100. That would be principal protected. But in the case for dual currency, it's not that case, because when you have set the buy level at 36,000, obviously if Bitcoin goes a lot lower, it could go to 20,000, 10,000, then you'll be suffering a loss because you were buying Bitcoin at 36,000. So that's how it's defined as non-principal protected. But obviously, we understand that some of the clientele of yield customers are more risk averse. So we are looking to add principal protected strategies into the offering, which basically allows you to invest $100 and get back at least $100 plus the upside of some Bitcoin or ETH or whatever. So you get to participate on the upside of this currency, plus you get 100% of your original principal. That's the strategy that we are working on right now.
Yeah, and so we're going to have some announcements coming up soon in terms of updates to Yield App. Big Haven 1 announcements coming up soon as well. We're also working on, there will be a bunch of AMAs, regional AMAs. We'll have a Chinese AMA, French AMA, Polish AMA on the horizon. And so some of these new products and so on will be revealed as we move forward. I would encourage everybody, obviously not everyone's available at 10 a.m. on a Thursday in Europe. So anybody who sees this, we want to hear your feedback. We want to keep in touch with everybody. We've got all the Telegram groups. There's a Yield Pro group on Telegram. If you can't find it, just join the Yield App Telegram and ask, and we'll point you in the right direction. There's one question left. I think this is really one for you, Lucas. It's more a broader question about APYs in general. So obviously right now people are seeing the price of Bitcoin go up, the market's going up. It looks like everything is picking up. But I had this question myself yesterday and I did some looking. The volumes right now are a fraction of what they were when the Bitcoin price was the same as it is now back in 2021. Obviously people are starting to wonder about price versus volume. How does that impact yields? Are we getting close to a time where we might look at seeing a sustainable growth in yields? Can you touch on that a little bit?
Yeah, sure. I think yields, if we look at just pure treasury yields, have gone up in that time period, right? We've seen obviously rampant inflation around the world. We've seen central bank intervention with increases in yields. So, the base case, short-term Fed funds window yield is obviously in the 5s now. Are we going to see a halting in rate rises as we see, these inflation numbers have come in now around about the 3 level? If we see a halt in the Fed and then the next move is a cut, obviously yields will come off and the back end yield curve will flatten out a lot more, and potentially go the other way. I think when it comes to crypto yields, it's a little bit more problematic, right? In that stable yields should at least reflect treasury yields plus, because that's your opportunity cost. Your opportunity cost is, do I hold a stable or do I go and hold treasuries, right? So my opportunity cost is, it should at least be treasuries, and then you should be getting some kind of credit enhanced yield as to basically the counterparty that's paying it, be it staking service, be it an exchange, be it yield app or the like. And what do people do with those coins, right? They say, well, okay, I'm going to go and buy some assets, right? So there's multiple strategies you can implement in this market, right? So let's say that you've got some stable coin, you think the market's going to go absolutely gangbusters, and you use your BTC or your ETH or your other coins as collateral to lever yourself up on an exchange and get as much exposure as you can. There's lots of ways you could skin the cat. Ultimately, people are holding on to Bitcoin, holding on to Ethereum. That means that borrow on those coins will go up, right? Because there's less supply, and less supply makes them more valuable. If you want to go short Bitcoin, you can either borrow it and sell it, or you can obviously go short futures, but you need to provide stables as collateral or some kind of collateral on exchange to be able to execute that strategy. For me, I think ultimately the outperformance of coins is quite tough in a bull market, right? You sit there and think, okay, we're up 10% this month, more than. I've got to get whatever my BTC is. Let's say I'm trying to achieve a 5% return in BTC over a year, and BTC is 10% higher. I need to go and buy more BTC. I've got to go and buy my yield is essentially 5.5%, right? Because I've got to go and cover more yield. So for me, yield should go up in line with central bank rate increases and credit, ultimately. And then when it comes to actual coins themselves, it's actually quite hard to generate yield on coins. Like, you obviously, the staking, etc. people have offered, but ultimately, what are they doing with it? They're just using it as collateral to go and do something else with it. So either you do it yourself, or you give it to people like ourselves, or fund managers, or exchanges, and they will generate the yield. But what are they doing with it? Ultimately, they're using it as collateral to generate returns. So it's my view on it is supply and demand, right? That's where yield will drive yields higher or lower.
And just going off the back of that a little bit, the last question we had wasn't in the chat, but it was posted on the Telegram, was how scalable are the yields that we generate at Yield App? So, obviously, the bear market was pretty quiet. Things are picking up. What if we had 5 times the users in the next 12 months, and the AUM, exponentially grew? How scalable is what we're doing, and what would be your, comments on that?
I had this conversation
optimistic
yesterday,
future?
actually, on scalability of yield. I've always liked us being relatively small to our peers, because I think we can generate the yields that we offer. We've always turned down large scale allocations from institutions. Even during the last bull run, we turned down some of our biggest competitors to run BTC for them. The choice you make is, as you go higher AUM, the assets you manage, the harder it is to generate the yield. And it actually is a function of liquidity as well, right? So, how liquid is this market? Well, it's not nearly as liquid as it was 2 years ago. The movement in the price of volume obviously is what drives volatility at the end of the day in this market, because the holders are the holders, right? They're not selling, they're just holding on to it, and they're just accumulating. And the traders are left with fewer and fewer coins to back up the trading. So ultimately we're seeing, as we saw the other day, huge moves, and those huge moves obviously make a big difference. So I don't know if I could do 2x from here. Probably it wouldn't affect too much. I think 5x becomes a little bit more problematic depending on the coins. We've got a lot of different coins. We offered them more than a year ago, and AVAX up 100%. My yield essentially doubles just on the price moves, right? So it's not that hard, but it's we're doable. If I just look at the numbers here that we generated in the last 3 months, well ahead of any yield that we pay. But I know September we didn't make any yield at all. If I look at our September numbers, we didn't make any yield at all. On a lot of the portfolio, we made 8 basis points in yield. In October we made 3% in yield. So if I net it out across September and October, I'm at 1.5%. Right, so it's doable, right? We're managing quite complicated scenarios. This month's been pretty good.
And you'll be delighted to know that we're going to be listing more tokens next year as well.
Can't wait.
All right. Well, I think we'll wrap it up there. We've got no more questions, but like I said, all of us are available all the time on Telegram. Obviously, you can also email me, peter@yield.app, with any follow-up questions. We've got some guy. We've got one trader who's already over 150 trades on Yield Pro, and I think he's in a one-on-one group with Andrew as well. So we're here for you. We can work through anything with you guys and run ideas past you, and we'll have a lot more to announce before the end of the year. If there's anything else you guys wanted to say before we go. Lucas,
Merry Christmas, Happy Hanukkah, and all the other festivities that are happening this year, and enjoy time with the family and get a break, and hope to see you all again next year.
Curtis and Andrew nodding in agreement. All right.
Yeah, just hit us up on the Telegram. Thank you.
Yep. Give us your feedback. Hit us up on Telegram. You know where to find us. Thanks once again, guys.